morning, people. It is Fed Day Wednesday. May 1st. April ended yesterday with a freaking bang, and now we are in May. Massive downside move yesterday. This is something that we were warning about in our update yesterday morning, where it looked a little top heavy and there was very limited opportunity for these buyers to take control, and they just couldn't do it. Massive downside sweep. We'll talk about what the S&P 500 looks like in that regard and what we could see today. But all eyes are going to be on the Federal Reserve. The meeting minutes, the FOMC rate decision comes out today. And this is where everyone's going to focus all their attention on. It comes out in the afternoon at 2 p.m. And I'm going to be looking to trade it, see what we get from that news event, taking it slow into it and during it, because I don't want to get flung around after this fairly volatile move. So the Fed has been consistent in one thing, saying that they want to continue their path to achieving 2% inflation, and it would be a bumpy one. So indeed, inflation has come in hotter than desired over the last 3 months, or the first 3 months, I should say, in 2024, meaning that the higher for longer will continue to be priced in by investors. As such, we don't expect any changes from the FOMC announcements in its monetary policy decision later today. And the expectation for the June cut, once the predominant view among market participants also looks out of reach. So they had put a lot of pressure in having, 7 cuts in December 2023. That dropped to 4, then 3. Now it's looking very bleak that we'll even see 1 by the end of this year. So policy will likely remain steady for the 6th and 7th straight Fed meeting, with the central bank holding its funds rates between 525 to 550 basis points. And in fact, a lot of analysts, the FedWatch futures, don't see any cuts this year. So the sentiment follows comments from Fed Chair Jerome Powell earlier this month, which outlined that the Fed's restrictive policy needed more time to work, as the labor market remains strong and disinflationary dynamics have stalled. So the U.S. stocks ended lower on the last day of April, dragged down by some disappointing earnings news, economic data, call it what you will, but downside pressure had flowed in with the lack of buying, that heavy selling coming through. So market participants also were very cautious the day ahead of the FOMC's latest monetary policy decision. Since January, Fed officials have said that they want more evidence that inflation is in a sustainable path to reach the central bank's 2% inflation target before they reduce rates. And so far, they haven't necessarily seen that evidence. In terms of the balance sheet, there will also be focus on the Federal Reserve's plans to slow the quantitative tightening during Jerome Powell's afternoon presser. After the last FOMC meeting, soon, which was backed up by the FOMC meeting minutes released 3 weeks later, on average, securities have run off at a rate of about $75 billion per month, less than its current cap of $95 billion per month, with Fed's total asset portfolio recently declining to $7.4 trillion from about $9 trillion in June 2022. So with that, that's going to be one of the big focuses today, I guess, as we run into news that comes out on Friday as well, the non-farm payrolls, and some news about earnings. Amazon. So Amazon, fairly interesting earnings movement yesterday, where we dropped at a low of 165. We got a high of about 186 or so, and right now we're slap dab in the middle of that, pretty much at yesterday's closing print. So, or a bit above yesterday's closing print. Amazon climbed barely, maybe 2-ish% after or pre-market here, with better than expected Q1 results, including a beat from Amazon Web Services. However, gains were curbed by e-commerce's giant sales guidance. On the earnings call, CFO Brian Olsavsky shot down the speculation that Amazon would join other tech powerhouses in initiating a dividend. There was some speculation around that, but would instead stick to the philosophy of investing in growth initiatives, going all in on generative AI. And the other news that came out, or the other earnings that came out, were AMD earnings that got pretty pummeled at one point after the bell. Right now, trying to slowly grind higher, but nothing is necessarily, it doesn't look as good as Amazon. So for those semis, for those chips, this sets a precedent of kind of lackluster momentum and earnings. We'll naturally see Nvidia in a few weeks, but it's not looking super hot. Other big tech names like Microsoft, right? These were some points of concern as we had mentioned yesterday, that big tech earnings, although they react fairly well initially, they gap up, they look pretty good, they honestly end up tumbling back down, and Microsoft was like that as well. We pretty much traded the most recent lows yesterday. It's gapping up a little. OpenAI and Microsoft have been sued by a conglomerate of newspapers owned by investment fund Alden Global Capital for alleged AI infringement. 8 dailies were part of the lawsuit, including the New York Daily News, Chicago Tribune, the Mercury News, and the development comes after a day after OpenAI signed a deal with the Financial Times to use its content to train AI models. Google also reportedly closed a deal with News Corp to pay the media company $5 to $6 million per year to develop AI-related content and products. So we'll see how the individual tech names kind of move over the next few sessions, especially with the FOMC. The FOMC is going to be a big decider here, but as it stands now, a lot of these gaps are getting flushed back down. Nvidia's pushing, some weakness. We've seen that Google, after its climb off earnings, is almost filling that gap from that all-time high move, and things are pulling down a little more aggressively. So what will the Fed do? Where will we go from that Federal Reserve announcement? That is to be determined as we get ready for Jerome Powell to take center stage. Realistically, it depends. It depends on what the monetary policy changes. It depends on what he says, how things go, and what the reaction of the market is. It's very difficult at this point to be like, oh, long, short, long, short. I think there could be some kind of momentum to try and pick up some longs earlier on if we change structure, right? But otherwise, right now, we've entered into like 7 billion distributions to the downside, which isn't ideal for the long side swingers. So currently, as it stands with the S&P 500 on the futures, we're in a distribution to the lower band. We've plummeted through like from the third top one into 2 lower ones. And realistically, as long as we're below that like mid 50, 60 on the S&P, lower than 70, there's going to be some kind of downside pressure initially on these markets. Until we start bidding above 65, 70, I think it's going to be a little more difficult to find the longs. If you're long under that area, just consider them counter trend fades at this point that are going to really, really need to see a lot of buy pressure for them to actually work out. We're seeing a minor change in structure through some of these levels. So far, we're trying to climb above this 51 to press higher and change this from from higher lows right into some higher lows right now. If we look at Delta, there's absorption into the lows around that 40 from prior areas last Thursday, before Amazon and Google sprung us higher into the close. But right now, as long as we're above this 45, there's imbalanced buyers and absorption from last week that are trying to push us higher. But again, right, we need structural changes if we're going to be happy about the turning point in these markets. Otherwise, we're in limbo. I'm not necessarily looking for crazy moves to start the session before the FOMC, and we'll see what we get from there. So, small perception for the long side to come in here pre-market, and we'll see where that goes. So, hey, Steven, I just saw that comment. I hope everyone has a great start to the day. Keep nimble, trade smaller going into the FOMC. What we're going to do is open up our live trading room here and see what kind of opportunity comes in before the Fed. And we'll see how it trades into the afternoon and see what kind of opportunity comes from there. So I'm going to be looking for that. I'm not necessarily biased right now. We're in a position where the shorts are on the front foot. And I want to see if that does continue. Otherwise, changes in structure, changes in distributions and auction, you've got some impressive longs on your hands. So yesterday was all sell, all sell. Sellers did not disappear from this market. Right now, hard to say. We got to see where this open lies. So a lot of absorption to yesterday, as we were talking about in our update. Too heavy of volume. We saw all the delta stacking up. This is a great tool if you're not using it. All that delta stacking up. So the buy side's on its last legs, and it really needs to perform here. Otherwise, and look at what we saw. So good morning, everyone. Hope you had a good update here. Learned a lot about what's going on, and I'll see you guys tomorrow. Let's trade this event, and we'll update you on what the Fed does in tomorrow's update. Update. All right. So take care. Have a great Wednesday, and we'll chat soon.